I'm not going to change those rules, right? I'm going to continue to do that because my number one goal on this account is to protect.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I was talking to a trader about 5 or 6 days ago. Actually, about a week ago. And here's his question. And it's an interesting one because I think it opens up a whole different world for traders when you start thinking this way. His question was, because I always talk about how when we're trying to improve our strategies, the impulse is to go and fix the entry, right? That's kind of like the initial impulse when we first start trading. But later on, you kind of learn that, your exit is really important for these sorts of things and changing the dynamics of your strategy and the risk rules. So he said, I know that you say this, Walter, that it's the risk rules and the exit. He said, I have a feeling like my trade management, the way I manage my trades. And so kind of like, moving to break even or how many trades you take. Do you know what I mean? It's kind of that ancillary stuff that shades into risk management. And he says, I feel like that really impacts my trades. And so the question he had was like, how much does that impact my trades? Obviously it's going to depend on which rules you're using, because there's a whole bunch of rules you can use in terms of that. Like, for example, for trade management, you could say the execution of your exit is a trade management thing. And if you're using a trailing exit, and you get the signal to get out of the trade, but you're sleeping at night, so you don't get out until the morning, and it's already moved beyond your, where you should have gotten out. Or if it's automated, right? If it's an automated exit, or if you have a move to break even rule after the market goes a certain amount in your favor, or a move to you move your stop loss to half, 0.5, so you're losing 0.5 R instead of 1. So there's all kinds of things you can do there. And his impulse was, I feel like that stuff impacts my trading more than the simple adjustment of risk rules or exit, how you approach your exits. So what are your thoughts on that?
I don't know what this person's actually doing, but I mean, speaking from personal experience in the past, like there's a very strong tendency to like move it to break even on this trade and then not do it on the next trade, and then maybe like split up the exits on the next trade, and then you're kind of all over the place and you don't have any real hard data. So I think it comes back to, again, like back testing each scenario, right? What happens? What are the numbers when I move it to break even? What are the numbers when I trail the exit or whatever? And then just kind of understanding that first, and then sticking to one or a hybrid maybe of two strategies. And I think that that seems like what he's trying to say. I'm not sure if that's right, but that's what I used to do in the past also. Like, oh yeah, I'm going to move to break even. I'll do that for 5 trades, and then the last one didn't work out, so I'm going to switch it to a trailing stop, right? So I think that's what's, I would say, at least. What do you think?
Yeah. I think you're. That's kind of the angle. Like I had thinking a lot about what do you like what's comfortable to you, what makes sense to you. It's kind of like when you marry yourself up with a strategy. So for example, I've had 3 trades recently where they all went in my favor, but they didn't go far enough to click out the initial target, and so they all ended up break even, right? So I could look at that and go, look, if I had gotten out of these trades when they were all deep in profit, I'd be sitting on 3.5%, over the last week and a half, but I'm not, and it's because I stuck to my rules. So the question is, what do you do with that experience? So you've had that experience. Do you decide? No, actually, one trade actually did really well, right? It hit the target, and the trailing exit went and it went and went, and that was great. But that was kind of like 3 weeks ago. That was an ongoing trade. But then the next 3 trades I had, they all did the same thing. They all went as expected, right? So I moved to break even. And one missed the target by like a 1.5 pips, like so close, and then came back and stopped me out at basically break even, right? I mean, it's a little bit positive, so it covers the swap, right? But So, and by the way, I take those out as winners, right? If they make $5 or $15 or whatever, because it was up a little, like half a pip from the entry to cover the swap or whatever it is, or a pip and a half, I take those out because that really reduces your average winner and it makes it look ugly. So I count those as break even, a different category, right?
Mhm.
So, like for me, I'm not going to change those rules, right? I'm going to continue to do that because my number one goal on this account is to protect. Okay, it's not to accelerate the account. It's to protect it from drawdown, right? And that's you know, everyone has their own rules. And for me, it depends on the account. So if you believe that, that's fine. Remember Colin, my old friend Colin, what he used to do is he would move to break even only after he saw that first surge in his direction and then a counter surge against his trade. So this would often be weeks later. So or on the case of a 4-hour chart, it might be like a week and a half, right? On a 4-hour chart, that's a long time. So he would have to wait for a surge pro trade and then a counter surge against him. And then when it looked like it was bending and going back in his direction, that's when he would move to break even because he knew that there was a counter surge coming and he knew that that would be likely to stop him out. So that was comfortable to him. So these are the sorts of things you have to think about as a trader is, do I move to break even quickly? Do I move to 0.05 R? What do I do? What makes sense to me? And I think he's right. This trader that I was talking to last week, I think he's right that it does impact your trading. But if you really, like if you're in the initial phases of developing a strategy and you want to make it better, the biggest bang for your buck is going to be your exits, changing your exits, assuming you have a good entry rule, right? And then you also want to look at what are your goals for the account, and that's going to impact your risk rules. And then when it comes to trade management, which was what he's talking about, it really comes down to the match of what makes sense to you. Like what are you trying to do here? Also, another tip is to record how well you're doing. So if you're not recording how well you are executing your entries and exits, then we don't know the impact of you as the executor, your approach to following the rules. We don't know how well you do that, right? That's a real key part of this that a lot of traders don't think about is they blame the system when if they actually went back and looked at their record, they'd see that they're actually not following the system. It was what you were saying, right? Mm-hmm, we're all familiar with the case of, you got 3 break-even trades that all went in your favor. So next time you're like, okay, I'm going to take quick profit, man. There's no way I'm going to let this happen again. That sort of thing, right? We've all been there. Yeah, so it's tricky.
And I think moving to break even is a comforting idea, but it's not necessarily the best thing to do, right? I think a lot of people kind of default to that because it feels good, but it's not necessarily like mathematically, advantageous, right?
Absolutely, yeah. In almost every study I've done, moving to break even reduces the profitability of the strategy. However, it also reduces your drawdowns. So you know what I mean? Like you have to decide. Like it's a trade. Like anything in life, it's a trade-off. Like in surfboard design, it's a trade-off. You can have a board that's really, really fast, but kind of hard to turn, or you can have a board that's super easy to turn, but you got to do a lot of work to make it go fast, right? Or get on the right kind of wave or whatever, right? So I mean, this is the thing. Like, what are you gonna do? How do you like everything in life? It's a trade-off. How do you decide what's right for you? And that's the main thing. I think some traders, we come into trading, we think, okay, how should I trade? How do you make money trading? What do I do? Right? That's not the right question. The right question is, what do I think about the markets? What do I believe? And then how can I map that out into a strategy? That's how I see it. Yeah.
Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.